Hey everyone, welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today's episode is going to hit home for a lot of you out there who feel stuck, stressed, or just plain confused about your trading journey. Maybe you started with day trading stocks, got caught up in the complexity of Forex, or dove into digital options and ended up losing more than you expected. Whatever your starting point, you might be asking yourself a tough but important question. Am I trading in the right market? If you're wondering whether you should stick it out, switch markets, or diversify your approach, this episode is for you. We're breaking down digital options, Forex, and stock trading. We'll look at risk, skill required, profit potential, and time commitment. By the end, you'll have a clear picture of what might suit you best. Let's dive in. First up, digital options. Digital options are probably the simplest form of trading you'll find. You choose whether the price of an asset, that could be a stock, currency pair, or commodity, will be above or below a specific strike price at a set expiration time. It's binary, win or lose. If you're right, you get a fixed payout, usually between 70% to 90%. If you're wrong, you lose the entire stake. So let's talk risk. It's very high. This is an all or nothing trade. No partial losses, no break evens. You either hit your mark or you don't. Skill level? I'd call it moderate. It's easy to start, but that doesn't mean it's easy to master. Success depends on discipline, sharp timing, and emotional control. Most trades are over in minutes, which means your decision making has to be fast and precise. Profitability? There's potential, especially in trending markets. But don't be fooled by the payout percentage. If your average payout is 80%, you need to win more than 55.6% of your trades to just break even. So it's not as easy as it looks. Time commitment? Pretty low. You can trade in short bursts before work, during lunch, or at night. It's very appealing to people with tight schedules. Who is this best for? Traders who like fast-paced environments, have limited capital, and don't mind high stakes. Who should stay away? If you chase losses, can't follow rules, or want long-term stability, this may not be your game. If you want to explore this world safely, try trading with a reliable platform like crystalballmarkets.com. They make digital options accessible, even for beginners. Next up, Forex trading. The foreign exchange market, or Forex, is the world's largest and most liquid market, moving over $6 trillion a day. You trade currency pairs by buying one currency and selling another, predicting how the exchange rate between the two will move. Risk level? Medium to high. Forex can be incredibly volatile. And because most people trade with leverage, the potential for big wins comes with the potential for big losses. If you don't manage your risk, you could lose more than your deposit. Skill required? High. This isn't a beginner's playground. You need to understand technical analysis, economic indicators, risk management, and trading psychology. It takes time to develop these skills. Profitability? Very possible, but only with a consistent strategy and strong discipline. Many treat Forex like a business, and that's exactly what it is if you want long-term returns. Time commitment? It varies. Swing traders and position traders can get away with checking charts occasionally, but day traders and scalpers are glued to the screen. That's suited for analytical minds, people who love charts, data, and learning systems, and those who are okay with putting in the work. Not ideal for casual traders or people looking for quick, easy money. Let's talk stocks. Stock trading is the most well-known form of investing. You buy shares in companies and profit when the price rises. You can also earn dividends or short sell stocks when you think they'll drop. Risk level? Low to medium. Stocks are generally less volatile than Forex or digital options, especially when you diversify. But they still carry risks, especially around earnings reports or breaking news. Skill required? Moderate to high. You need to understand how companies work, read financial reports, and analyze charts. It's a different kind of complexity than Forex. Profit potential? Historically strong for long-term investors. Active trading can work, but it often requires more capital because of regulations like the pattern day trader rule in the US time commitment. Again, it depends. Long-term investors might check in once a month. Day traders need to be active during market hours. Best for those who want steady wealth building, enjoy researching companies, and have more capital to work with. Not ideal for anyone seeking fast results with limited funds. Let's compare them directly. Digital options versus Forex. Digital options are simpler. You either win or lose based on a yes or no prediction. Forex is more strategic, with variable profits and losses based on how much the price moves. Digital options give you fixed returns. Forex profits scale with your position size and price movement. Digital options are fast. Forex can be fast or slow depending on your style. In terms of sustainability, Forex gives you more room to grow, scale, and build a system. Now let's compare digital options and stocks. Digital options often run 24/7 depending on the broker. Stocks are typically tied to market hours. Digital options thrive on short-term volatility. Stocks can be more stable and research-driven. Digital options are fixed risk and reward. Stocks offer more flexibility. You can hedge, diversify, and set trailing stops. You can start digital options with as little as $10. Stock trading often requires more capital upfront. So which trading style is right for you? Here's a quick cheat sheet. Choose digital options if you want fast-paced trading, low entry costs, and can handle emotional pressure. Choose Forex if you want a scalable strategy, love analysis, and are committed to learning. Choose stocks if you want a balanced, research-based way to grow wealth and have some capital to deploy. And hey, you don't have to pick just one. Many traders use all three to diversify their strategies. The key is alignment. If you hate sitting at a screen for hours, maybe swing trading stocks works better than scalping Forex. If you love quick decisions and known outcomes, digital options could be your thing. If you want a path to consistent, skill-based income over time, Forex might be your focus. Test, reflect, and find your rhythm. You're not just trading markets, you're trading your time, your energy, and your mindset. And if you're ready to give digital options a shot, do it with a platform that supports your growth. Head over to crystalballmarkets.com, a trusted home for traders who want control, clarity, and confidence. That's all for today's episode. Until next time, I'm Sophia, reminding you to stay strategic, stay grounded, and trade with intention.